Hi everyone, JJ here with The Art of Value. Welcome. Well, today we're going to talk about the company Topicus. It's a serial acquirer of software companies. It's a spin-off from its bigger company, Constellation Software, well known, and its founder, Mark Leonard. Today is edited from a longer live stream I did where I got into the Q3 earnings of Topicus, gave my comments on it, and talked about the thesis in relation to Constellation Software and Mark Leonard. So I hope you enjoy it. Let's get into it. Look at that. You will not see a better curve on a stock chart like that. Constellation Software and the spin-off I mentioned, Topicus, which I am a shareholder of. The stock shares react as cash flow doubles. Ooh, we must read that. Topicus is up 30% for me. That's a long-term hold for me. The thesis is that they've got the same business model as Constellation Software, but it's Europe. So they're in the European market. They are acquiring software companies all over Europe. So there are different languages, different markets. So it's probably a bit more difficult than in North America. Mark Leonard is one of the best capital allocators in the world, I believe. Constellation Software is a Canadian diversified software company. It is based in Toronto, Canada. Is listed on the Toronto Stock Exchange. The company was founded by Mark Leonard, a former venture capitalist, in 1995. It went public in 2006 and now has 25,000 employees spread over 6 operating segments. You know, they're a conglomerate constellation of companies. Constellation Software has about, I think, more than 600 companies that it owns at this point. But let's read about Topicus. All right, Topicus stock shares react as cash flow doubles! Exclamation mark. Topicus stock remains under the radar despite strong fundamentals that would lead to immense growth for the very near future. Shares of Topicus spin-off of Constellation Software rose slightly after strong earnings came out for the company, yet a major question hangs over in the balance as to whether investors are really valuing the company correctly. Let's look at earnings for Topicus stock today and the news that came with it. This is from Motley Fool, this article. Topicus stock reported an increase in revenue of 22% year on year, reaching 278.8 million euro for the quarter. This included 8% organic growth as well. Acquisitions were completed in cash consideration of 7.2 million euro as well. Cash flow from operations more than doubled to 25.5 million euro year over year, up by a whopping 134%. The big growth came mainly from acquisitions, according to the management. This helped fuel an increase in net income as well, reaching 28.3 million compared to 18.4 million the year before. While growth was there, investors didn't exactly warm to the stock. So what's up? Part of the reason I suspect Topicus stock didn't exactly soar in share price is twofold. First, a number of tech stocks, both in the Canada and the US, came out with earnings on or around the same day. This put Topicus stock in the shadows. Secondly, while the stock was strong, there wasn't really any major news to come out for the company. Well, just keeping on compounding is the news. That's the news as a fundamental investor that you want to see. This is actually a great thing for today's investor. While Topicus stock rose, it wasn't by much, meaning you can still get in on a deal for a great stock. What makes it so great? Because it's the spin-off of a parent company, Constellation Software. Constellation stock has surged over 1,300% in the last decade alone. It's grown to become an acquisition powerhouse to find essential software companies needing an upgrade. Topicus stock is doing the same thing now, but in Europe, as I said, hence the euro reporting and earnings. So investors today can get a great deal on a long-term hold that also could surge by 1,300% in the next decade. Well, we'll see. It could. I'm betting the business model will also work in Europe and do well. Fundamentals are strong. Investors seem to be wary of tech stocks right now, especially ones that are new. Granted, Topicus stock falls into both of these categories. It's a company that's been on the market for only about a year. And of course, it's a software acquisition company, making it a difficult buy if you're trying to convince investors who have been burned by new tech stocks before. Indeed, but this is a spin-off from Constellation Software with Mark Leonard involved. Very good capital allocator, and he's done very well for this over decades. It's a proven track record. Shares have also performed well with Topicus stock, up about 36% year to date as of writing. This is one of the very few stocks I bought fairly close to the spin-off to the IPO. This makes it a strong, stable stock in a tech sector that its parent company has proven is a lucrative one in the past. So while there wasn't any major news, this could be a good thing. Let this stock fall under the radar for now. When it's discovered by the masses, it's surely set to soar. Well, by the masses, it is trading in Canada and it's based in Europe. Could be quite a while before it gets discovered by the masses, and it's still small. Well, it's not that small. It's actually not that small now. It was sort of almost too big even when it IPO'd, but it's up 30% and the market cap's 5.4 billion, enterprise value 5.7. So, 10x. I think 10x is possible for this over the long term, at least. Now, if you're getting value out of this episode so far, don't forget to hit that like button on YouTube if you're watching there, or on X, or indeed on Rumble, to help the algorithms to spread it to more people. If you'd like to take your show of appreciation for the art of value to the next level, you can now go here to buy me a coffee. Just a small one-off donation. It's not a subscription or anything. I'd really appreciate that show of appreciation. Thanks. Now we're talking. Now we're in the weeds. This, if you're a proper investor, you do look at the actual filings and investor relations and so forth. They don't have an earnings call, which is a bit annoying, but understandable. That's another reason that they're under the radar. Not many analysts covering it. I think that'll increase over time. It's not an outpouring of news. And then before that was August results, so they were pretty quiet. Please note that all amounts referred to are in euros. Q3 2023, revenue increased 22%, 8% organic growth to 278 million compared to 228.6 million in 2022. Net income from 18 to 28. Cash flows for operations increased 14.6 million to 25 compared to 10.9. So here we are. Cash flows from operations. That's great. That's great. 14.6 compared to 10.9 in Q3 2022, representative an increase of 134%. What's Topicus stock done? Year to date, it's up 26. Over the past year, it's up 32. So I'm about 30. So I've captured most of that. And just since earnings, it's not even up since earnings. Total revenue for the quarter ended September 30, 2023 was 278.8 million, an increase of 22% compared to 228 million for the comparable period in 2022. For the first 9 months of 2023, total revenues were 815.3 million, an increase of 25%. The company experienced organic growth of 8 and 7%. Organic growth is not a standardized financial measure and will not be comparable to measure disclosed by other issuers. It's an interesting metric that they provide there. They provide minimal commentary. What I want to do is look at GuruFocus. There hasn't been a lot of history. It's only been public a year, but there's starting to be more of a history that we can see. So since IPO, it's up 35.86%. Above the low, it's 40% above the low that it got to. And below the high, it's actually down 41% from the high, which, the tech did get excited. Here we go. Let's look through these metrics. I want to see this. There's a bit of history now. So we've got $5.4 billion market cap. That's in US dollars. This is getting beyond small cap now. If you think 5 billion is the cutoff, it's sort of getting above the small cap range, but I got it within the small cap, so I'm happy about that, just because of the quality of the company and I believe a very long runway for growth. Return on equity 23% and return on capital employed 19. I think the S&P 500 average is about 15, so anything above that in return on capital employed is good. This is not working it out manually, by the way. This is just from the site GuruFocus. As I said, I'll put a link to that in the description on Twitch and elsewhere. This is going up steadily, as it's kind of reminiscent of Constellation Software. So there's a bit of history now going back. 2019, return on capital employed, trading 12 months 18, 2022 is 17. It's all going in the right direction. Gross margin is 35, 36, 38. Operating margin 15, 14. So keeping in mind that I own the stock, so I'm just checking up on it. Guru value 66.42. It's at 66.68. The thing about quality companies is that they're hardly ever undervalued. If you read the book 100 Baggers by Chris Mayer, he owns a stock. I think he does, yes. So it's a possible 100 bagger. He thinks companies that have gone 100 baggers are hardly ever undervalued. And it's okay, because if the growth is there, as Charlie Munger said, it's better to have a have a quality company at a fair price than a fair company at a good price. Warren Buffett said that too. That's something that they've talked about, that Monk convinced Buffett of. Traditional value investing is buying something. It's not a really good company, but it's at a really good price and it'll go up to fair value. But you have to do that over and over again if you are going to take that strategy. It's not what I do. I have done that in the past. GuruFocus reckons that this is fairly valued at the moment. Spent most of its life overvalued here. It was impressive. The cash flow from operations more than doubled. So it's going well. That's the bottom line for Topicus. So the returns on capital are really the most interesting over the long term. If it can keep up returns on invested capital, return on capital employed, can keep that sustained over time, then you've really got a quality company. And so this has got a short history, but Constellation Software's got a long history. It's the same business model. The question is, can they do the same? So it's looking good. Return on equity, trailing 12 months, 22.62, quarter by quarter, into the 20s. So return on capital employed is what I'd be interested in over time. Can they continue, or can they have a high return on capital employed over the long term? I'm betting yes. It's really a bet on their business model and the capital allocator involved. All these metrics look good. They've had a good quarter, so it's good earnings. So this is Mark Leonard's letter. And it was last 2021. February 2021 was the last one. One of our directors has been calling me irresponsible for years. His thesis goes like this: CSI can invest capital more effectively than the vast majority of CSI's shareholders. Hence, we should stop paying dividends and invest all of our cash. We should invest all of the cash we produce, even if it means lowering our hurdle rates. Now, keeping in mind when we read this, we're thinking about Topicus in the future. I used to argue that we needed to maintain our hurdle rates because dropping them for a few marginal capital deployments would cause the returns on our entire portfolio to drop. The evidence supported my contention, so we kept the rates high for small and mid-sized vertical market software, VMS, that's what they acquired, and made very few exceptions for large VMS acquisitions. The byproduct of that discipline has been to perennial inability to invest all of our cash that we generate. An inability to invest. So they generate so much cash that they want, when they make acquisitions, they want to do it cheaply, and so they're getting to the point where they can't make enough acquisitions, good ones, and they don't want to lower the quality. What have we done with the excess cash flow available to shareholders? Historically, we have paid 3 special dividends, and for the last decade, we have also paid a regular quarterly dividend. So I'm not that keen on dividends, but if they're generating so much cash that they don't know what to do with it, rather than putting it into something that doesn't compound or does it as a bad investment, sort of the last option to dividend, or buying back their own shares if they're inexpensive. I have stopped arguing. I have converted, and with the fervor of the newly converted, I am busily demonstrating my newfound faith. The obvious first step is to stop special dividends in all but the most compelling circumstances. If we are successful in finding better uses for our free cash flow, the quarterly dividend will also be sacrificed. We will continue to invest most of the company in small and mid-sized VMS acquisitions at our traditional hurdle rates. Our operating group managers have done a spectacular job of growing CSI's market share of acquisitions within the portion of the VMS sector without succumbing to the siren song of increased centralization, bureaucracy, and control. So this has been part of their success by not having increased centralization and bureaucracy. Most of these businesses are blessed with big moats and long tenured employees and customers. So this is what they'll be looking at. This is what the same thing that they're looking at for Topicus. Big moats, long tenured employees and customers. At head office, our original objective was to be good perpetual owners of VMS businesses. Our success forced us to delegate that task to the operating groups. So Topicus was one of those operating groups that they've spun off the European group. Head office now needs to become a good steward of our investors' capital. Topicus is the small cap spin-off from this, and it's clear from what Mark Leonard says there, they've always tried to compound at a high rate, so he's thinking of ways to do that. About not betting against Elon Musk, I wouldn't bet against Mark Leonard. In sum, at the moment, I'm very happy to stick with Topicus. It seems to be going very well. The metrics there seem absolutely fine. There's nothing that stands out as being in danger. In fact, it's the opposite. It's great. Really looking for things that are going to break the thesis. If the thesis is going wrong, I don't see anything going wrong here. I see that it's fine. It's more than fine. So I'm happy just to hold. And that's how we go. Thanks for watching, and I will see you in the next one.